Well, folks, those of you who were not fortunate enough to have your student loan forgiven are in some form of repayment, and the question is, how is that going to affect my ability to get into a home, and can I ever get into a home if I have this huge amount of student loan debt? Well, thanks for coming into thecreditjungle.com today. This is George Anderson.
George of the jungle, strong as he can be.
And there is a complete matrix on how to determine what payment that we use to calculate your student loan debt into. And so rather than going into the full matrix on this, what I want to do is give a summary of how you go about determining it, and then I'll give you a best case and a worst case scenario. But there's so many variables in this that the easiest thing to do is to push button, get mortgage professional, talk to me, let me go ahead and look at your status, what statements, anything that you have for supporting documents on that, and then determine which type of loan will give us the most favorable treatment. So first of all, we have to determine what is the status of the student loan. Now, the statuses that are referenced in the underwriting guidelines, and I got to cheat just a little bit on this, okay? You've got 10 months or less to repay on the student loan. It is either discharged or canceled. You're in a forbearance, you're in a deferral, you are in an income-driven repayment plan, or you can be in an employment contingent repayment plan. And then finally there is the, if it's been forgiven, but it's still showing on the credit report, then we would need some form of documentation for the forgiveness of the student loan. And under those circumstances, we can count a zero payment, and then same thing with canceled or discharged in a bankruptcy, something of that status. But for all of those that are in between, Fannie Mae, Freddie Mac, FHA, VA, and USDA all have a different formula for doing it. So what's interesting about this is that FHA and USDA and Freddie Mac will not allow you to count a zero payment on there unless, of course, you've got the forgiveness or the canceled or the discharge status on it. So more than likely on those three types of programs, we're going to have to count a 0.5% of the balance of the student loan as a monthly payment. So therefore, a $100,000 student loan is going to be assessed or assigned a $500 payment. 0.5% of the balance becomes a monthly payment on there. Now, what's interesting is that VA has a slightly different calculation, and rather than tell you their formula, which is take the balance times 5% and divide that by 12, that comes to taking the balance and multiplying it times 0.416%. So on a VA loan, if there's a balance on the loan, we're going to have to count on a $100,000 loan, we would count a monthly payment of $416 a month. Now, the one that we did not talk about is Fannie Mae. Fannie Mae, ironically, has both the most lenient under some circumstances and also the most difficult calculation to do it. The worst case scenario with Fannie Mae is you got to count 1% of that student loan payment, which would be $1,000 a month. So obviously the difference on a conventional loan between having to count a $500 monthly payment versus a $1,000 monthly payment is going to be a big draw to make the loan work as a Freddie Mac loan rather than a Fannie Mae loan. Now, when somebody's doing that, it's just still a conventional loan. And regardless of the closing papers and who's servicing your loan, it's still going to look like a conventional loan. But on the back end of things, lenders have to kind of know these little tweaks in the guidelines. But Fannie Mae also, under the right circumstances, will allow a zero payment, to not count a zero payment even with a balance. So that's the one exception on there, that if there's a balance showing, Fannie Mae, with the right documentation, we can show zero on that student loan payment. And that could be the big difference for somebody getting into a house. So I know this is a lot of stuff to think about and a lot of stuff to consider, but at the end of the day, that's my job. That's what you guys are paying me to do, is to look at your situation, figure out how we're calculating your income, figure out how we're calculating your debt ratios, and then get an accurate determination of the status of those student loans. So hopefully this is just a little, give you some hope that there's some reprieve here, that this is not going to be some anchor that's going to keep you from ever getting into a home. There's ways to be able to do this, and whatever the status of that student loan is right now, it could change. And if that becomes an impediment, then we can help you understand the guidelines and what type of options there are to change the status of that to help you eventually qualify for more house and get you into the home that you deserve. So thanks for coming into thecreditjungle.com. This is George Anderson, and I hope to talk to you soon. Have a great day.
George of the jungle, strong as he can be.